Good afternoon, everyone. We are the Group 5. Before we will proceed with the discussion, let me share with you first a Bible verse saying, "Bring the whole tithe into the storehouse, that there may be food in my house. Test me in this, says the Lord Almighty, and see if I will not throw open the floodgates of heaven and pour out so much blessings that you will not have room enough for it." By Malachi 3:10. Now let's proceed with the discussion. Our topic for today is about exclusion from gross income. What is it? Coming from the word exclusion, refers to items or receipts not included in the determination of the taxable income because the law or the treaty said so. The law specifically excludes certain items from gross income that are generally non-taxable. They are excluded from income tax return unless it was specifically called for. Classification of exclusion from gross income. Under this, we have according to law and according to the nature of receipts. In according to law, we have number 1, exclusion under Section 32B of the NIRC. Number 2, exclusion under special law. In according to the nature of receipts, we have number 1, non-taxable compensation. Number 2, non-taxable other receipts. So this will be discussed in the following slides. Non-taxable compensation income. This refers to the earnings that are compensation in nature but which the law specifically excludes as part of the gross income for taxation purposes. Specifically, these non-taxable compensation incomes are: first, we have holiday pay, overtime pay, night shift differential pay, and hazard pay earned by minimum wage earners who has no other reportable income. Number 2, income earned outside the Philippines by Filipino overseas contract workers or OFW, non-resident Filipino citizen, resident alien, and foreign corporation. Number 3, 13th month pay, bonuses and other benefits not exceeding 30,000 per year, or other benefits include excess amount of the prescribed ceiling of diminished benefits. Number 4, compensation received under employer's convenience benefit rule. Number 5, proceeds of life insurance policies paid to the heirs upon the death of the insured. Number 6, amounts received from health insurance or under the Workmen's Compensation Act for personal injuries or sickness, plus the amounts of damages received whether by suit or agreement on account of such injuries or sickness. Number 7, retirement benefits under RA 7641 and reasonable private plan maintained by the employer. These following conditions must be met. Number 1, the retiring official or employee has been in the service of the same employer for at least 10 years. Number 2, he or she is not less than 50 years of age at the time of retirement. And lastly, he or she has not availed of similar benefits in the past. The law does not require that the employee's service should be uninterrupted within 10 years. Number 8, amount received by an official or employee or by his heirs from the employer as separation of such official or employee from service of employer because of death, sickness, or other physical disability or for any cause beyond the control of the said official or employee. Number 9, social security benefits, retirement gratuities, pensions, and similar benefits received by resident or non-resident citizens of the Philippines or aliens who came to reside permanently in the Philippines. Number 10, benefits from Social Security System or SSS, including maternity benefits as stipulated in RA 8282. 11. Benefits from the GSIS, including the retirement gratuity received by government officials and employees. Number 12. GSIS, SSS, Medicare or PhilHealth, Pag-ibig contribution and union dues of individuals. Number 13, de minimis benefits within the prescribed ceiling. Number 15, tax exemption of allowances paid to military personnel. And lastly, casual employment like house helper, maid, not connected in the conduct of business of employer. Now we have non-taxable other receipts. These refer to the amounts or values received other than compensation that are not taxable according to law. First one, we have amount received as a return of premiums paid by him under life insurance, endowment, or annuity contract either during or at the maturity of the term stated in the contract or upon the surrender of the contract. Number 2, the value of property by gift, bequest, device, or descent. However, the income from this in case of transfers of divided interest shall be included in the gross income. Income of any kind to the extent required by any treaty obligation binding upon the government of the Philippines. Then number 4, payments of benefits due to any person residing in the Philippines under laws of the United States administered by the United States Veterans Administration or USVA. Number 5, income from investments in the Philippines, loans, stocks, bonds, or other domestic securities or interest in deposits in banks of the Philippines. Examples are foreign governments, financing institutions owned, controlled, or enjoying refinancing from foreign governments. And lastly, international or regional financing institutions established by foreign governments. Number 6, income from any public utility or from the governmental function accruing to the government of the Philippines or to any political subdivision thereof. And number 7, prizes and awards made primarily in recognition of religious, charitable, scientific, educational, artistic, literary, or civic achievement, but only if the recipient was selected without any action in his part to enter the contest of proceedings, or not required to render substantial future services as a condition to receive such prize or award. Number 8, prizes and rewards granted to athletes in local and international sports competition and tournaments, whether held in the Philippines or abroad and sanctioned by their national sports association. And number 9, gains realized from the sale or exchange or retirement of bonds, debentures, or other certificate of indebtedness with a maturity of more than 5 years. Number 10, interest on long-term deposits or investments in banks with maturity of 5 years or more, received by individuals except non-resident aliens not engaged in business or practices of profession in the Philippines. Number 11, interest received by non-resident individual or a non-resident corporation from deposits with the depository banks under the expanded foreign currencies deposit system. Number 12, interest on the price of land covered by CAR, Comprehensive Agrarian Reform Program. And number 13, interest on government bonds, especially when provided in the bond issue. 14, gains realized by the investor upon redemption of shares of stock of a mutual fund company. 15, intercorporate dividend or dividend received by domestic corporation from another domestic corporation. And lastly, 16, Philippines charity sweepstake winnings and Philippine Lotto winnings.
Tax exemption of statutory minimum wage earner. Statutory minimum wage shall refer to the rate fixed by the Regional Tripartite Wage and Productivity Board, which is the RTWPB, as defined by the Bureau of Labor and Employment Statistics of the Department of Labor and Employment. The RTWPB of each region shall determine the wage rates in the different regions based on established criteria and shall be the basis of exemption from income tax. Under the New Republic Act 9504, the compensation income of MWEs who work in the private sector or public sector and being paid the statutory minimum wage as fixed by RTWPB and National Wages and Productivity Commission is applicable to the place where he and she is assigned is exempt from income and not subject to withholding tax. Holiday pay, overtime pay, night shift differential pay, and hazard pay earned by the aforementioned minimum wage earners shall be covered by income tax exemption. However, an employee who receives additional compensation such as commissions, honoraria, fringe benefits, benefits in excess of the allowable statutory amount of 30,000, taxable allowances and other taxable income other than statutory minimum wage, holiday pay, overtime pay, night shift differential pay, and hazard pay shall not enjoy the privilege of being a MWE, and therefore his and her entire earnings are no longer exempt from income tax. Minimum wage earners receiving other income such as income from the conduct of trade, business, or practice of profession, except income subject to final tax, is addition to compensation income, are not exempted from income tax on their entire income earned during the taxable year. This rule, notwithstanding, the SMW, which is statutory minimum wage, holiday pay, overtime pay, night shift differential pay, and hazard pay, shall still be the subject to income tax and consequently to withholding tax. Any reduction or diminution of wages for purposes of exemption from income tax shall constitute misrepresentation. It shall result to the automatic disallowance of expense, that is, compensation and benefits, account of the part of the employer. The offenders may be criminally prosecuted under the existing laws. Minimum wage earners with other business. This is the first illustration. Mr. Joseph Tayo, single, is a factory worker receiving a minimum wage of 382 pesos a day in the National Capital Region. During the month, he received 9,900 minimum wage, 1,000 hazard pay, 5,000 overtime, and 2,000 night shift. The question is, how much is the amount of non-taxable income and taxable income of Mr. Tayo during the month? That non-taxable and taxable income of Mr. Tayo during the month would be the total of his non-taxable income is 7,932 while taxable income is 0. Why? Since Mr. Tayo is a minimum wage earners and has no other income other than those subject to final tax, all of his income earned is non-taxable and consequently not subject to withholding tax. Illustration number 2, which minimum wage earners with taxable additional compensation. So, Ms. Josephine Tayo, single, is a sales worker receiving a minimum wage of 382 pesos a day in the National Capital Region. During the month, he received 9,932 minimum wage, 5,000 overtime, 2,000 transportation allowance, and 6,000 for sales commission. The question is, how much is the amount of non-taxable income and taxable income of Ms. Tayo during the month? The total income of Miss Tayo in non-taxable is 0. However, her taxable income totaled 22,932. Why? The entire earnings of Miss Tayo shall no longer enjoy tax exemption because she received additional compensation other than the statutory minimum wage, hazard pay, night differential pay, overtime pay, and holiday pay. Next is the 13th month pay, bonuses, and other benefits. 13th month pay, bonuses, and other benefits not exceeding 30,000 are tax exempt. So let's illustrate. Mr. Roy Mondoya, a mechanical engineer, received a basic salary of 25,000 per month. He received the following during the year. Basic salary is 300,000. 13th month pay is 25,000. Productivity bonus is 10,000. Clothing allowance is 5,000. The gross income of Mr. Mondoya can be shown as follows. His basic salary is taxable, which is 300,000. 13th month pay and other benefits is 30,000 to the non-taxable. Taxable productivity bonus, which is 5,000. Clothing allowance, 4,000 for the non-taxable. Clothing allowance excess amount, which is 1,000 for taxable. A total taxable is 306,000 and a total non-taxable is 34,000. The non-taxable 13th month pay and other benefits are computed as follows. 13th month pay is 25,000. Productivity bonus, 5,000. A total non-taxable 13th month pay and other benefits is 30,000. Only 5,000 of the productivity bonus is allowed to be part of non-taxable other benefits to meet the 30,000 non-taxable ceiling of 13th month pay and other benefits. The clothing allowance, classified as de minimis, is not taxable to the extent of 4,000. Any excess amount can be used as non-taxable other benefits if the 13th month pay and other benefits do not yet reach the 30,000 ceiling. Otherwise, the excess becomes taxable. The next one is tax-exempt contributions. GSIS, SSS, Medicare, Pag-ibig contributions, and union dues of individuals are considered as tax-exempt contributions. However, GSIS Educational Plan Premium and GSIS Memorial Plan Premium shall be considered as part of the employee's compensation subject to withholding tax. So let's illustrate. The payslip of Mr. Kawawana, a government employee, reported the following items. His gross compensation is 15,000, less withholding tax, which is 1,000, advances from cooperative, 500, GSIS membership, 300, and GSIS educational plans, 200. A total of 2,000 less to 15,000 is equal to 13,000. The compensation income excluded the gross income would be 300, representing GSIS membership. The taxable compensation income would be 4,700. Benefits under employer's benefit rule. A benefit is said to be for the convenience or advantage of the employers when it is required by the nature of work or necessary to the trade, business, or profession of the employer. Benefit under employer's benefit rule is not subject to income tax. So let's illustrate. Mario Choper is a driver of a physician. Received 9,000 as basic salary. In addition to his basic salary, he is provided pre-board and lodging by his employer with an approximate value of 5,000 per month, with an agreement that he can be called work anytime. Trooper's basic salary amounting to 9,000 is subject to tax, but his additional benefits are not subject to tax.
Good afternoon, everyone. So for today, we'll tackle all about the proceeds of life insurance, proceeds received by the insured person, and gifts, bequests, and devices. So first, let's tackle about the proceeds of life insurance. So it says here that the proceeds of life insurance policies paid to the heirs or beneficiaries upon the death of the insured, whether in a single sum or otherwise. However, if the proceeds are held by the insurer under an agreement to pay interest thereon, the interest payment shall be included in the taxable income. So this means that the proceeds coming from a life insurance, it will be exempted when it will be paid to the heirs or beneficiary upon the death of the insured. For example, someone availed of an insurance policy and then later on he or she died. The proceed coming from that life insurance will be given to the heirs or to those beneficiaries such as his or her children or wife. That will be exempted as part of the gross income of those receivers since it came from life insurance. And when we say life insurance, it is a security or protection against loss, and our loss here is the life of people who are insured. So once that person died, the life insurance policy will pay the certain amount to the heirs or beneficiaries, and therefore that will be exempted under part. For example, I received proceeds coming from a certain life insurance. I did nothing about the proceeds that I received. It is not my gross income, thus it will not be included in my gross income. However, if there's an interest income or interest payment coming from this life insurance, that will be the taxable part of our gross income. We have a lot of kinds of insurance out there. However, the excluded of gross income is your proceeds coming from the life insurance. Here is the illustrations of proceeds of life insurance. Assume that Mr. Saturn Nino insured himself for 1 million pesos. After paying 300,000 pesos of insurance premium, Mr. Nino died. His surviving wife designated as a revocable beneficiary received the amount. So is the 1 million pesos life insurance proceeds taxable? Here, the 1 million pesos in life insurance proceeds received by Mr. Nino's wife are not subject to income tax, but they must be included as part of the gross estate subject to estate tax. So, if Nino's wife is an irrevocable beneficiary, which means she cannot be changed, then the 1 million pesos proceeds of life insurance are not taxed for both income tax and estate tax purposes. And next is the proceeds received by the insured person. So, when the insured person outlived the life insurance policy and subsequently received the life insurance proceeds, the proceeds received is taxable to the extent of the excess of premium paid. So, both proceeds of life insurance and proceeds received by the insured person are actually connected. However, for the proceeds of life insurance, the insured person is dead, and for the proceeds received by the insured person is he outlived his insurance policy. For example, there's a person who insured his life and then later on in the insurance policy contained that if in case he can outlive it, then he will receive something out of insurance policy. The return of his premium or return of capital of the insurance will be exempted of his gross income. However, the excess of the premiums will be taxable since he outlived his insurance policy. So let us look in this illustration. Mr. Apolinario Mapili took a life insurance policy amounting to 1 million pesos, which is to be received after 30 years. he outlived the policy and personally received the life insurance cash surrender value after paying the annual premiums of 10,000 pesos per year, which he paid for 30 years. Is the 1 million pesos life insurance proceeds taxable? Here, the amount received by the Mr. Mapili in excess of his life insurance payments is taxable since it reflects a gain because he outlived his life insurance. The exemption for life insurance proceeds is only valid when the beneficiary is other than the insured person. So, the taxable income from the proceeds of life insurance is computed as follows. So, the amount of life insurance proceeds is 1 million pesos and then plus total annual premium paid. So, to get the total annual premium paid, we have to multiply 10,000 pesos times 30 years. So, 1 million pesos minus 300,000 is equals to 700,000. And then this 700,000 is called the taxable gain on life insurance. So, mauni iya ang nagain ni Mr. Mapili. And next, the gifts, bequest, and devices. The value of property acquired by gift, bequest, device, or descent. However, income from such property as well as gift, bequest, device, or descent of income from any property in cases of transfers of divided interest shall be included in gross income. So this means that if you receive a gift, that gift will be excluded from the gross income. However, when that gift has an income out of it, it will be taxable or it will be part of the gross income. So when we say gifts, this refers to any property legally and validly transferred from one. When we say gifts, the taxability of it is under your donor's tax. When we say bequest or devices, the difference of the two is when we say bequest, this refers to personal property. And when we say devices, this refers to real property. This too is given upon the death of the donor or it formed part as an inheritance to the part of the receiver or heirs or beneficiaries. Our taxability here is estate tax. So therefore, they will not be included in the gross income because they are being paid by the donor himself or herself. The only thing that we should remember here is that the income coming from these gifts or donations will be taxable. So let us look in this illustration. Chris received 1 million pesos as a gift from Mayor Chong. Since there is an increase in her wealth, she contemplated to include the 1 million pesos as part of her gross income subject to tax. So, is Chris correct? The answer is no, because Chris should not include the 1 million pesos in her gross income for tax purposes because the 1 million pesos is a gift. It is excluded from income tax. The 1 million pesos, on the other hand, is subject to donor's tax, which Mayor Chong must pay. So the next topic will be reported by the next reporter.
What is compensation? Is a tax withheld from income payment to individual arising from an employer-employee relationship. Compensation is the total cash and also non-cash payment that you give to an employee in exchange for the work done for the business. Typically, one of the biggest expenses for business with employees. Compensation is more than an employee's regular paid wages. It also includes many other types of wages and benefits. So, what are the examples of compensation? The overtime wages, bonus pay, tip income, and etc. And also the benefit insurance, retirement, standard vacation policy. So, taxation of damages. The law governing the taxation of damages has undoubtedly developed its fair share of technicality, but its general principles can nevertheless be stated quite shortly.
The nature of the harm suffered by the plaintiff must be determined to see whether he would have been taxable in respect of the interest which has been affected. If, and only if, that interest would have been taxable, damages or other compensation paid for interference with it will also be taxable. If damage is done to the plaintiff's capital assets, then no tax will be payable on the compensation paid therefore, since capital is not taxed. In Inland Revenue Commissioners v. Newcastle's Breweries, for example, compensation was paid to wine and spirit merchants for the requisitioning by the Admiralty of a quantity of the rum. It was held that the requisitioning was the equivalent of a compulsory sale, and therefore that the compensation must be treated as a trading receipt and be brought into the profit and loss account for the year. Retirement benefits, pension, gratuities, etc. Letter A. Retirement benefits received under Republic Act No. 7674 and those received by officials and employees or private firms, whether individual or corporate, in accordance with a reasonable private benefit plan maintained by the employer, provided the retiring official or employee has been in the service of the same employer for at least 10 years and is not less than 50 years of age at the time of his retirement, provided further that the benefits granted under this subparagraph shall be availed of by an official or employee only once. For purposes of this subsection, the term reasonable private benefit plan means a pension gratuity, stock bonus, or profit sharing plan maintained by an employer for the benefit of some or all of its official or employees, wherein contributions are made by such employer for the officials or employees or both for the purpose of distributing to such officials and employees the earnings and principal of the fund thus accumulated, and wherein it is provided in said plan that at no time shall any part of the corpus or income of the fund be used for or be diverted to any purposes other than for the exclusive benefit of the said officials and employees. Letter B. Any amount received by an official or employee or by hers from the employer has a consequence of separation of such official or employee from the service of this employer because of death, sickness, or other physical disability, or for any cause beyond the control of the said official or employee. Letter C. The provisions of any existing law to the contrary notwithstanding, Social Security benefits, retirement gratuities, pensions, and other similar benefits received by the resident or non-resident of the Philippines or aliens who come to reside permanently in the Philippines from foreign government agencies and other institutions, private or public. Letter D. Payment of benefit due or to become due to any person residing in the Philippines under the laws of the United States administered by the United States Veterans Administration. Letter E. Benefits received from or enjoyed under the Social Security system in accordance with the provisions of Republic Act No. 8282. Letter F. Benefits received from the GSIS under Republic Act No. 8291, including retirement, gratuity received by government officials and employees. Miscellaneous items exempt from tax. Miscellaneous deductions are deductions that do not fit into other categories of the tax code. There are two types of miscellaneous deductions. Number 1, deductions subject to the 2% limit. These deductions allow you to deduct only the amount of expense that is over 2% of your adjusted gross income or AGI. Miscellaneous deductions subject to the 2% limit fall into the following three categories: legal fees related to your job, license and regulatory fees, malpractice insurance premiums, medical examinations required by an employer, occupational taxes, passport for a business trip, repayment of an income aid, payment received under an employer's plan, research expenses of a college professor, rural mail carriers vehicle expenses, tax preparation Fees. You can deduct tax return preparation expenses incurred in the year that you pay them, such as software or filing charges. However, you cannot deduct the convenience charge for paying your tax by credit card. Other expenses you can claim as miscellaneous deductions include the appraisal fees, casualty and theft losses, clerical health and office rent, depreciation on home computer, excess deductions of an estate, fees to collect interest and dividends, hobby expenses, indirect deductions of pass-through. Number 2, deductions not subject to the 2% limit. Miscellaneous tax deductions that are not subject to the 2% limit include amortizable premium on taxable bonds, casualty and theft losses from income-producing property, federal estate tax on income in respect of a dissident, gambling, losses up to the amount of gambling winnings, impairment-related work expenses of persons with disabilities, repayment of more than $3,000 under a claim of right, and recovered investment in an annuity. Prizes and awards in sports competition. Republic Act No. 7549, Section 1, provided that such prizes and awards given to said athlete then shall be deductible in full from the gross income of the donor. Provided, further, that the donors of said prizes and awards shall be exempt from the payment of donor's tax. The benefits herein provided shall cover the 60th Southeast Asian Games, SEA Games, held in Manila from November 25 to December 5 in 1991. Sec 2. As used in this Act, the term Number 1. Sports tournaments and competitions shall mean those tournaments and competitions sanctioned by the national sports associations in accordance with the rules and regulations pursuant to Section 3 hereof. Number 2. National sports associations shall mean those duly accredited by the Philippine Olympic Committee. Sec 3. Upon the recommendations of the Commissioner of the Bureau of Internal Revenue, the Philippine Sport Commission, PSC, and the Department of Finance shall, within 30 days from the effectivity of this Act, jointly promulgate rules and regulations necessary for the effective implementations of this Act. Sec 4. All laws, decrees, executive orders, other executive issuance, rules and regulations or parts thereof which are inconsistent with this Act are hereby repealed or modified accordingly. Sec 5. This shall take effect upon the completion of its publication in at least 2 newspapers of general circulations. So, are awards and prizes taxable? So, the Internal Revenue Code states that under certain circumstances, the value of prizes and awards given to individuals is considered taxable income. Merchandise or product won as a prize or award will be considered at the fair market value and could also be considered taxable income.
Gains from the sale of bonds, debentures, or other certificates of indebtedness with maturity of more than 5 years, and gains from redemption of shares in mutual fund company as defined in Section 22B of the Tax Code are exempt from tax. BIR Commissioner Pardo ruled that the exemption will only be extended to capital gains and not to interest income pertaining to investment securities of more than 5 years. So the illustration shows that on January 1, 2000, Kay Langit invested in a 10-year 12% bond for 1 million pesos. In October of the same year, Langit sold the bond for 1,100,000 pesos, resulting to the gain on sale of 100,000 pesos. The question is the gain on sale exempt from tax? Well, definitely yes. The gain on sale of 100,000 pesos is exempt from the tax because the face of the bonds indicates a maturity of more than 5 years. The holding period of the investor in this case is not the basis of tax exemption, but the maturity period as indicated on the face of the bonds. Interest income derived by Philippine National Red Cross from currency bank deposit and yield or any monetary benefit from deposits, substitutes, and from trust funds and similar arrangements are exempted from 20% final tax imposed under Section 27D. Pag-ibig mortgage certificates that are categorized under the definition of long-term deposit or investment, the interest income of which is exempt from income tax pursuant to Section 24B1 and Section 25. This is true, however, if said PMCs have a maturity of at least 5 years and are denominated and marketed in units priced as low as 10,000 pesos and which are listed and traded through PSE and enrolled with the Philippine Central Depository for scriptless trading. The illustration below shows that Kulas Madulas purchased 10 Pag-ibig mortgage certificate at face value of 10,000 pesos each, carrying interest of 12% per year. At the end of the year, Madulas received an annual interest of 12,000 pesos. The 12,000 pesos is not subject to final withholding tax of 20%. Section 60B of the Tax Code specifically exempted employees' trust from income tax. It follows, therefore, that the PERAA retirement plan trust must be deemed exempt therefrom. The interest income derived by PERAA retirement plan from its depository bank under the expanded foreign currency deposit system is exempt from the 7.5% final withholding tax imposed under Section 24B1 of the Tax Code. The illustration shows that the PERAA deposited its dollar cash under the expanded foreign currency deposit and earned $20,000 interest. This interest income is tax exempt. The following educational institutions are exempt from income tax. The first one is the government educational institutions, and the second one is the non-stock and non-profit educational institutions. Revenue or income from trade, business, or other activity, the conduct of which is not related to the exercise or performance by such educational institutions of their educational purposes or functions, shall be subject to internal revenue taxes when the same is not actually, directly, or exclusively used for the intended purposes. The illustration shows that Benguet State University received tuition fees during a school year amounting to 10 million pesos. The entire tuition fees received is not subject to income tax. The income of a qualified senior citizen is exempt from the payment of income tax provided his annual taxable income does not exceed the poverty level of 60,000 pesos per year, except interest income. The illustration below shows that Abraham is a senior citizen. He deposited his unused pension pay in time deposit and earned 10,000 pesos interest income. The 10,000 pesos is subject to 20% final tax. Section 5 and 6 of Republic Act 7459, or the Inventors and Inventions Act of 1991, provides tax exemption for 10-year period which starts from the date of first commercial sale. However, prizes received or income earned not attributable to the sale of commercial scale of the invention or technology. The prize to be awarded to the individual inventor or inventors shall thus be subject to the final tax of 20%. In the illustration that is being shown below, only the 100,000 pesos prizes received from the Inventor Society is subject to a final tax of 20%. The sales of invented products shall be tax exempt for 10 years. Cooperative incomes derived from transaction with members are not subject to tax. However, cooperatives are not exempt from the following: A. Value-added tax on its purchases, B. 20% final tax on interest income, and C. 7.5% tax on foreign currency deposit. The illustration below shows the transaction of Baguio Benguet Cooperative during the year.